Hello everyone and welcome to the third video tutorial about the Mythical bot, our product dashboard slash signaling slash position management product. In this video, we will talk all about this small section of the UI, a very powerful small section. This is called heat map. Well, there are different ways of showing heat map. If I search for Forex heat map and go into pictures, we have different ways of showing different heat maps. There are tons of ways. By the way, I really like this. Okay, this is one of the ways, actually. When you look at this, we have two sections of pairs, and we compare the pairs to each other. So for example, for Euro USD, we are predicting that Euro USD will rise up. Euro GBP, we predict to fall. Euro JPY, rise. This is one way of drawing heat maps. Okay. The other way is this guy. It's going for USD in different minutes and time frames. So for example, it says that USD is powerful in 1 minute, weak in 5 minutes and 10 minutes, and in higher time frames, it's very powerful. The numbers will dictate the amount of power. Okay. The third one is this guy, that is almost the same as this guy, but very easier to understand. For example, USD CAD will rise, NZD CAD is rising, and CAD CHF is dropping, blah, 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 blah. This is another way of doing it. For Euro, we predict that Euro USD is upping, Euro CHF, Euro JPY, and Euro CAD, Euro blah, blah is dropping. Okay? This is another way. Most of the time you see one of these 3 or 4 forms. To be honest, looking at it like this or like this is not very accurate. Or even this. They are not really accurate because they are just comparing 2 markets to each other, 2 fiats to each other, and comparing their numbers and doing a simple summing maths between these values and then drawing something fancy for you. This is not how it works. In contrast to this way or this way of looking at heat maps, this way is much better. But again, it's very complicated. Different time frames. Okay, what should we think about this market right now? The worst one is this guy, right down here. Aussie dollar JPY. What does it mean? Aussie dollar JPY all. It says it's at the bottom of the numbers, it's red, but at the same time we see some time frames actually of 4-hour and daily and 30 minutes as green. And then monthly, weekly, and 1 hour as red. So what should we do with this market? That is why we think as the team that a better way actually to read heat maps is not by this. And actually, if you take a look at something like this, it's more even confusing, you know. And there are even more confusing stuff. If I find a picture for it. Like this. Or even more confusing. Well, looks simpler, but it's confusing. If I see the picture of the product, I don't think so. Something like this. And then what are all these, you know? And even, no, I didn't see it in here. So if I add, was it FFX? I don't remember. There was a product in the market about this that would draw a box here for you and predict these things for you. But the problem is that the main issue with these things is that the main formula they use is not accurate all the time. As simple as that. They choose one or two factors and they predict the market based on those factors. Let me see if I can find a product here somewhere from the market. What was it named? Universe Strength Meter. Okay, take a look. It can use moving average. It can use MACD. It can use stochastic, RSI, WPR, CCI, ADX, DMARC, Bull's Power, Ichimoku, Beer's Power, Force Index, OSMA, and RVI. Right now, it's set on moving average, but you can choose whichever you want. Now, here's the problem. When you predict the strength of a market, basically the heat maps, based on one factor, you are ignoring the rest of the factors. So if you want to really be precise, you need to have as many of these close to each other, and then sometimes they don't agree with each other. For example, let's see if I can find something. Let's put one on MACD, and it should go at the bottom right. Yep. And another one on, for example, Ichimoku. See, the thing is changing. And I want to make this horizontal shift to 200, I think. Yep, something like that. It's not exactly the same. Make it 250. Okay. So take a look. Here it says NZD is 2 green. Here is 1 green. Okay, that's okay. But take a look at Euro. In MACD, Euro shows power. Here is too weak. Another one is CHF. Here is weak. Here is powerful. So how should we decide on these powers? Which one is the accurate one? Which is the correct one? We can't tell because we are simply looking at one single factor. That being an oscillator is the worst type of trying to guess the strength of the markets, actually. So what is the proper way of strength monitoring? Is to compare all 20 pairs to each other. It's a very complex formula here. It's a very complex math there. We need to compare all of these to each other to make the decision that something is more powerful in the market right now and something is weak. For example, you see all Aussie dollars are gone to negative. And if you look, you see that Aussie dollar is actually very powerful right now. But the daily, sorry, is it the hourly on top? No, actually. The daily is not as powerful as the hourly. So, we had an impulse move upward that caused both of them go up. But at the same time, it's not followed by the daily, so the chance is for down. And you clearly see it in the charts, you know. Here we go. Hourly is very powerful, so upward move. Daily is not as powerful as before. but it's still powerful upward. Compared to that, USD is falling behind. So if we are using Aussie dollar USD, the powerful is Aussie dollar, that is the first in the pair name, that causes the upward move. And we are clearly seeing it, upward move. And USD is not that much powerful. The worst market is right now JPY. So if we go for USD JPY, we are still predicting an upward move because USD is the first pair there in the pair. It's more powerful than JPY, but it's not as powerful as some of the other markets. It's on average 4.5, 3.7. So it's not a very powerful market, but it had an impulse compared to JPY that is weak. If we look at USD and something else, for example, GBP/USD, we predict that it may go a bit sideways, and it's already going sideways. Why is that? Because they are almost at the same level, 5.1, 4.5. GBP is a little bit more powerful. That is why we are seeing a little bit upward move, but that's not that powerful. So it's going sideways in the daily run, if we take a look at that. Yep, it's a sideways move. Basically, GBP and USD are balancing each other on some way. If GBP drops, chances are that the USD is rising a little bit, and vice versa. Same goes for Euro, especially if we take at Euro GBP. If we take a look at Euro GBP, in the hourly chart, we see a little bit downward move because, well, Euro in hourly is losing power and GBP is gaining power. But in daily, we clearly see a sideways move for a few days because their daily is exactly close to each other by 0.3 difference. Okay? This is how you're using the heat map. And for this heat map in general, we are using a math that is comparing all 28 pairs to each other. The formula is not ours. It was something that we found, tweaked a little bit, not that much, and just changed the view and the look and integrated into our chart. I think it was a wiki page that was talking about it. I can't remember the keywords I looked for it. Honestly, the formula was done with the Noelia, our math gear. I happened to fall on the wiki and I couldn't read the math. So I told Noelia to take a look at it. But all in all, that's it, That's the market. And I recall that someone told me that a similar product is in the market, maybe, somewhere. But the formula was a bit different. The biggest issue we had was on the point digits. But the global thing was the same. I don't know if we tweaked the formula or he was not 100% accurate to the formula. I don't remember that talk. It was near a few months ago. As I said, I'm not that good at math. I'm decent, but not a pro. So I can't talk a lot about the backbone of this thing. But I know how to use it as a trader because when it comes to trading, I'm the core guy in our team. And that is why I'm recording the videos and no one else. And that is exactly why most of the posts in our website, mythicalbot.info, if you take a look at our web posts, most of them are by me. Because I'm good at artificial intelligence, programming, machine learning, and on top of that, I'm a pro trader. So I know a bit of everything. That is why I'm writing it, and To be honest, I have more free time to write the articles. But hey, you may see some article coming out by some other person anytime. At the time being, I'm the sole writer of the website, blah, blah, blah. Okay, so how to use this and when to use this heatmap? As I said, normally, if you are handling the direction management properly, you wouldn't need to be that much concerned about this guy, the heat map. Only when you are finding a very problematic chart. For example, let's say our GBP Aussie dollar is not -2, but it's -70. That is a deadly market for us. Opening the chart, we can't read this chart for whatever reason so good. So we will take a look at the heat map. The first pair is GBP. Okay, it's halfway there. The next pair is Aussie dollar. Oh, it's gaining power. Or it may lose the power. We need to keep track of it. Okay? For maybe an hour or two. Remember, at this point in the time, this position was opened for 2 weeks or a week and a half, and it's on -$10, -$100, and chances are that we are having 5 different positions in some 5 different places for long, for whatever reason, like so. For example, at the time we were here in the market, we predicted that, okay, we are hitting the base and we will rise up. Then the market went on, and for whatever reason, we left it open, okay? So now we are in the losing mode and $100, and here we are not sure if we hit a support zone to let it go, or for example, let's talk about something like this, okay? We are not sure if it's a support zone or we will go down more. Should we close these deadlies? Should we balance these deadlies? What should we do? Okay, at this point in time, we may add few more hours for this. As long as we are not breaking this low level, we have time. So we start to track GBP and Aussie dollar. Only those two. Okay? Now, let's say that we see that, okay, GBP is gaining, Aussie dollar is gaining an hourly and daily is following it, and GBP is losing an hourly and daily is following it. So the chances is that because Aussie dollar is gaining and Aussie dollar in the second in this pair, the market will go down. So chances are that we will break this level. So we may want to close these right here, right now. Or in reverse, we may see that, okay, we had a good upward impulse on Aussie dollar, but it is slowly losing its power, and GBP is gaining power. So the chances are that we will rise. Okay, we may not go up all the way to this level. Okay, there is a big chance for that, but we may end up somewhere around here-ish. Basically, it's halfway between our positions and our the price right now. So it means that if we are in -100, when the market gets here, we may be -$50. So instead of losing $100, we will lose only $50. So we will let the positions go around here. But if we see that Aussie dollar is continuously gaining and GBP is continuously losing, we may want, actually, for that time, we may want to put 5 stop loss levels below this candle. Okay? Because the heat map indicates that GBP is losing and Aussie dollar is gaining. But right now, what I see, GBP is rising slowly but constantly in hourly. Aussie dollar is steady, but it may lose its power. I'm following it closely maybe you want to write down the numbers, these four numbers, and then, I don't know, 20 minutes later, 30 minutes later, every 30 minutes, take a look at these numbers, compare, write, compare, write. Also, the chart is not that bad, you know. The very first level is here. So instead of 100, we may lose 75. The next level is around here, $50. The next one is here, so minus $25. On all these three levels, I will track not only the market, but now GBP and Aussie dollar on the heat map. And as it's going up, I may want to move this stop upward as a trailing stop. Just to be careful, because this is a deadly market. We will talk about deadly markets later. But when it comes to deadly market, anything that you need to do should be done, basically. If you need to move, put a stop loss, do it. If you need to put trailing stop, do it. If you need to move your stop loss higher up, do it. If you need to immediately close it, do it. That's a deadly market. If you don't manage it, for example, let's take a look at weekly. It was, for example, in this zone, your minus $100 positions. If you don't manage it right here and you're in minus 100 and the market moves here, you will immediately encounter 200, 300 minus dollars just on this single market. So at some point you need to start managing this deadly market. And that's exactly what we will talk in the next video. I'm keeping the option window for the last one because I covered most of it. But deadly markets, deadly positions in your robot, for whatever reason, most of the time, if you are not letting the dictation go all nuts by itself and dictate these levels, and you are doing it manually, getting in a situation like this is most of the time, 99% of the time, your deadly positions will be your personal false behavior. Maybe you got emotional about this market. I don't know. Maybe you predicted something. Maybe you read some news. Maybe there is a fundamental thing for it. I don't know. For whatever reason, you let a bad position go on. If you took a note of this support level, on weekly, the moment it was broken, you should be alarmed. You didn't, for whatever reason, now you are in a situation with $100 negative. If you predict that this level in weekly is breaking down, close it. Because if it's going there, then it's minus 150, another 50 loss. If it's breaking there, it may go all the way to 200. And God help you, if it breaks this level, you go all the way to getting your account wrecked just because of these 10 positions. So that is why we call these positions deadly. Well, it won't correct you, actually. If it's minus 100 up to here, 200, 300, 400, maybe $1,000. But how much would you lose? Why should you do that? Well, right now, we are on a support level. Yes, we may want to track it all the way here. That's the weekly, by the way. Take a look at monthly. Yeah, that's a support level. But if it's this support level loses, then we are going to $250 minus. And if it's broken, then we go to 500, 600 minus dollars. I prefer to lose $100 if it's happening, if I guess it will happen. But if I, for whatever reason, suspect that this support level will hold up and we will have a chance for covering this for whatever reason, yes, that may be the case when I will let everything follow upward. So the heat map is a good way for you to predict stuff. For another example, right now we set NZD USD. Where are you? Here. To go down. But we see that NZD got more power if you compare these numbers to the start of the video. And USD didn't got that much. So chances are that NZD USD will flip upwards. You may want to turn off this sell for time being. Just because of that. And you may want even to go with the more powerful side. Although the hourly chart is indicating that you should go down. But the heat map is not agreeing with your chart. Although the prediction says that it will go down, but right now at this moment in time, this is not agreeing with us. So turn it off. Maybe a few minutes later we see that NZD dropped again. Okay, then we will turn it on. Okay? So that is how you should manage these things. That is how you read the heat map. Just the pair that you are using here, their left side is for buy, the right side is for short. Which one is more powerful? NZD, USD. NZD more powerful? Buy. That's not a dictator, by the way, here. That's only an indication. If this indication agrees with these arrows on the left, and it's agreeing with your own prediction, voila, that's a winner. Go with even higher targets there. But if there is a discrepancy between these three, be cautious. Turn that market off for a few minutes. You won't lose anything. Right near, I think from the starting time that we started the whole thing from the demo on the first video, up until now, it's less than 3 hours actually that I'm recording videos one after another. And we already won $18 on balance. Now your equity is a bit lower. Let's talk about these. Because you have some positions open and each position is 0.01 lots and my margin is 1 to 500, means that each position will need $2 to open the position. Okay, I have 24 positions, so $48 is being used right now for open positions. I'm still winning. That is because I don't see equity below 5,000. See, I'm winning some bears, and I'm not that much in loss in other places. So if we look at the whole equation, yes, we are actually near $40 below. That is our free margin, by the way. But equity is the free margin. Equity is balance minus plus your profit. So it's minus 12. So 18 plus minus 12 equals 6 or 5. But your free margin is actually your balance minus the margin. So we opened some more positions. That is because you saw the equity drop. We opened more. We were in 24. No, actually it's 24 yet. So the margin is rising. Yeah, we opened one more. Okay, so we are constantly opening and closing positions. That is why this equity will rise and drop. Two important things. With the current setting of 5 positions per market, if you manage this stuff correctly, you shouldn't drop below 4,900. So upmost you should have 100 negative on your equity compared to your original balance on the very first week. It shouldn't drop below that. Okay? So if you see, for example, 2000, minus 2000, minus 3000, be sure that you are doing something wrong in this section, in the first 3 columns on the left side. Something's wrong there. You are guiding the bot wrong. Okay? Uh, and it will always be a gap between equity and balance. Because uh, with the current 5 position per market setting, if we get all of them at 5, then it means that there will be a gap between these two. Because we opened markets and they are locked in full potency, and although they are closing some of the positions, but they are opening another pair. So the bot is fully busy at that moment for whatever reason. So although the balance is going up, the equity will go up, there will be a gap. Okay? So for example, in ideal case, this will be your balance, and this should be your equity. I draw it wrong, but it should keep a fair, equal distance all the time. Well, we are not living in an ideal world, so your equity will be like this. This is what we call breathing equity. It will go below, then it will get closer to your balance, then more positions will open or fall below, then they get profit and it will get closer. But if you mentally draw an average of this equity, just mentally put a line there, you will see that it is still following very closely with the same gap with your balance. If that is happening, if this condition is happening, then your bot is working healthy. As time passes, you will gain money more and more and more. There is some limited cases that this equity will rise above the balance. Hit the flatten button right there. I'm telling you, hit the flatten right there. Okay, so right now you see, because we are opening more positions as we are going forward, and some of the markets are either in retrace against us or going sideways for whatever reason, we are still losing a bit of balance there, equity there, but our balance is good. So right now we are gapping between $17 to $16. This is another thing that you want to take note and write down for the very first 2 weeks. So for example, right now it became to $19 gap. Keep that gap in mind, okay? So for example, you may see that, okay, after 2 weeks of this bot doing with my guidance, the biggest gap I saw was $40, $50. Okay. And the smallest one I saw was $30. Okay, 30 and 50. The middle one is 40. So I'm expecting somewhat between 50 and $30 gap between these two, but they should rise up with that gap. If for whatever reason suddenly I see that 50 became 60 or 70, and I'm positive above my initial deposit, hit the flatten. There is something wrong there. There is something happening there. After 2 or 3 weeks of following and gaining those numbers, of course. You should keep that in mind. The only time that you will see something like this, this is your balance rising up, and this is your equity, okay? So on average, equity was following you with a predefined gap. But you do something, and you should predict it. You do something and it will become flat or even go down, and the gap will rise until sometime in future that it will get closer to the same gap before. Or maybe continue with a bigger gap compared to before, but it will maintain that gap. The time that it is happening is when you let more positions per market. Right now it's 5. If you rise it to 10, you will suddenly drop on equity. Because, well, more markets can open. Of course, you will only do it if you see the 5 limit hit all the time. Up until now, I only see NZD CAD on 4 positions. That is only time I'm seeing it, and well, you can guess in 1 or 2 hours it will drop. And it's 4, by the way, not 5. So we didn't cap up on NZD CAD yet. But if you see almost all of these, at least more than half of these are capped on 5. First of all, make note of how you are guiding the bot. And if you are guiding correctly, everything is okay, then okay, you may want to rise the points if your balance is letting you. Okay, that's 20. Right there, 20 gap, $20, $21. So keep note of these numbers, okay? And it's rising because, of course, NZD CAD is being locked for a few hours. As I said, up to $50 gap is okay by these settings if you guide it correctly. But beyond that, pay attention. So let's say $50 gap. What does it mean? It means that until you get 50-50 on balance, you are not really gaining anything. From that point forward, you are earning. Okay? That means that, basically. So that is the equity and balance. Always keep an eye on your margin. That is the amount of dollar you are in position, and especially your free margin. You may see a $50 gap here, but here right now we are seeing $80 to $90 gap between balance and free margin. That's important. You should take note about that. You don't want this free margin to drop very drastically. That's making more risk for you. If at any time you feel like, okay, this is going, free margin is going way below my safety level, or my feelings are a bit irrational and not, and I can't think logically, just turn off the bot and follow and start managing your positions at that point. Okay? Just turn off the bot. Don't panic. Because when you turn off the bot, it won't take more positions, so the margin won't rise. You are just that. Only free margin will drop because of your loose positions. Then start managing those positions. We will talk about that later in the next video, actually. That's all to it. But if you panic and right now hit the flatten, well, you lost some money there. When you hit the flatten, your balance will become equity, equal to equity. So if I hit the flatten right now, I will end up with $8 loss on my initial balance. So just keep these things in mind. Okay, in next video, I will talk about managing bad and especially deadly positions, because that is important. That is when you are facing with a situation that really can harm your free margin and equity. If you manage that correctly, then you are in a good path. You will gain more and more as time passes. Have fun. Bye-bye.